Welcome back to another episode of the Club Cultivate podcast. Today is a fun episode. Maybe others might not think it's as fun, but I am doing a solo episode about a fun financial conversation, and here is why. Revenue does not equal profit. And I'm sure this is a very obvious, straightforward point, but as I was growing my business, doing my side hustle, I always saw people online talking about making six figures and making a lot of money and doing all these things. But the more that I dug into numbers, I always questioned, okay, are they advertising their revenue, their sales income, or are they advertising that they are taking home six figures in profit? All of that confusion that I had led me to read a book and learn about a system that I want to dive into today. The book is called Profit First. If you're watching on YouTube, I'm sharing this cute little book. It is Profit First, Transform Your Business from a Cash-Eating Monster to a Money-Making Machine by Mike Michalowicz. Don't know if I said that correctly, but this is a awesome system that allowed me to simplify and organize my cash flow and my finances. So I think that while we're not going to get into the nitty-gritty today, I do think that this can be a very valuable episode with additional resources to point to if this is a conversation that you find helpful. To kick things off, the most common thing that we learn when it comes to finances or accounting is to follow this simple formula of sales minus expenses equals our profit. However, the author of this book shifts gears a little bit with his system using an equation of sales minus profit leaves us with our expenses. The reason that he sets this up is because we're always going to spend what we have. And so if we don't pay ourselves profit first and take that out of our income, then more times than not, we're not going to have enough to pay for a profit at the end unless you just have that high of margins. And so shifting gears and thinking about the title of the book, obviously is called Profit First. Highlighting that is the key component of this book. And I find it refreshing and valuable to think about how can we pay ourselves and still run a profitable business in the same breath. And so I'm going to walk through a few of the things that you can do to implement this system, and then we will also talk about why I think it is so valuable. In order to pay yourself first, the first thing you have to do is make sure you have a profit account. So the big piece of this system is to set up 5 different accounts: an income account, a profit account, operating expense account, a tax account, and an owner's compensation account. And so you are going to drive all of your income to the income account, obviously. And then 2 times a month, he recommends on the 10th and 25th, you're going to distribute that income into your 4 other accounts, which is a perfect representation of providing profit first and paying yourself first. So a certain percent of the income will go into profit, a certain percent will go into expenses, taxes, and owner's compensation. Now you might be wondering, okay, how am I supposed to know what goes where? And he gives a general recommendation of percentages that he has found healthy businesses to be at, given certain income ranges. When you are a smaller business operating with less than $250,000 in revenue, more times than not, you are going to be the only one, maybe with a few contracted employees or a few assistants, but you're going to be the only owner. And so the owner's compensation percentage is going to be high. He recommends that for a business with revenue under $250,000, you want that owner's compensation to be 50% of the business, with profit around 5%. For taxes, he suggests doing a 15% allocation and the remaining 30% being put towards operating expenses. Now, this is ideal. This is really healthy, but there's a couple things that he caveats. And again, this is just a very high level conversation because I wanted to shed some light on a book that I find very valuable. However, businesses are different. Industries might be different. He even has an advanced section in the book that talks about additional accounts that you may need beyond the 5 primary accounts to help run your business well. But it's a good way to look at how your business should be set up. And if you do an assessment of your own business, he recommends using the prior year or two's information to kind of see, okay, were you paying yourself a profit? Were you paying yourself an owner's compensation? How much had you set aside for taxes in the past? And even how much of your business is an expense. And it can kind of give you an idea of, okay, maybe you're not going to meet his recommendations, but are you really far off? Are your expenses 75% of your business, leaving the other 25% for taxes, profit, and owner's compensation? So these are general recommendations, but the first time I did this, it really opened my eyes to what maybe I should work towards. I don't know if this resonates with anyone, but I feel as though creatives often, we get into design or photography and you're just kind of doing it and you just kind of charge a little bit here and there. And most of the time people just put their income back into their own account and don't even have separate bank accounts for everything. But even if you have one separate bank account, you may not be making a ton, or, you're just like, oh, it's just a side hustle, so I don't need to worry about setting up a system. You may not even know what you're charging, what percentage of that is a profit margin versus expenses to cover your product or service. And so I definitely did this at a place where I had nothing in place. And going out on my own, running a full-time business, I needed a system to pay myself. And so putting money into these different accounts really helped me know that I was going to have money to pay myself twice a month, that this is what I had in expenses. The other big thing with setting up these accounts and allocating different percentages to different accounts is what cash flow looks like. There was a lot of times when I first started where you see a big number in the bank, and because we don't use checkbooks and balance our checking account, a lot of times, it might look high, but do you have checks out? Are you having a lot of people, getting paid soon, like bills due, all that kind of stuff? And so it's really nice to know that, hey, my taxes are taken care of because I'm pulling 15% twice a month. And so by the end of the year, I know I'm going to have the money for my tax bill. That is a huge relief. And so that's part of the reason I think this system is so valuable. Once you have those 5 accounts and you determine what percent you want to allocate from the income into each of those accounts, you can do this via spreadsheet to calculate those percentages. I just have a Google spreadsheet where I drop in my income number, and 20% of that goes to taxes, 30% goes to da-da-da-da-da. However you set up those percentages. I do that twice a month, and I think it is valuable to have separate bank accounts, again, to see where everything is at. But then I use a Google spreadsheet to just make sure that I know what my numbers are. You could also probably just do a calculator if you wanted to make it really simple, but it should really take only 5 minutes. And it's another thing of you getting your eyes inside your books twice a month. There was times when I was really busy starting out that I didn't really have a designated time to go through my finances or just look at numbers. And this was another system that really helped me say 30 minutes, shouldn't even take 30 minutes. 30 minutes twice a month, I move money, I get an idea of what's going on, and I know that I'm good. Now, for the profit piece, the author recommends pulling those out quarterly. And a big thing about this system and having a profit account is to use your business profits as a reward. We do not create businesses to overwork ourselves and not ever get paid and stress and worry and all the negative things that come along with building a business. There are plenty of positive things, and one of those should be that we actually make money. At least make money for the work that we are doing, and hopefully build a profitable business where you can take those profits and do something to enjoy the hard work. I think of it as a little bit of an incentive. When he suggests celebrating these quarterly profits, he recommends going to dinner or taking a trip or buying something that you want, or actually using the money to spend something fun. And I think that it can be a great little reward. And also, like, if I work really hard and this business is doing really well, then we can do things that we wanted to because we built this business. A lot of times that's also a time freedom thing, not just a financial freedom thing. So there's a difference between the profit, which is the reward of running your business that he recommends pulling quarterly, versus the owner's compensation, which is you just getting paid for the work that you are doing as if you were an employee of the business. And so, like he mentions, like I mentioned earlier, when you're running a business with under $250,000 in revenue, most of the time it's going to be one person maybe. So you should get a much higher owner's compensation percentage. Whereas if, you know, your business was doing millions and you are a true CEO and you're just kind of managing things, that's going to look different. All that to say, I think that it is still a good place to start, and even just start with 1% profit and then work your way up to what you want it to be. A couple of the other benefits of this program that I think are super valuable is when you do this and you realize that, you know, okay, you have 75% of your income is dedicated to expenses. I think even if you can't get that number down to 30 like he recommends, you might still look at your numbers and go, whoa, I'm spending a lot. And you either need to charge more to make a more profitable business, or you need to cut expenses. Maybe you're spending things. And he recommends cutting expenses first, knowing that like you can always sell more or do more. But if you're not systematizing your business, there's not as much value in just making more money because you're still going to be spending more. And so your margin of profit is going to be less. So I think that it has helped me see things that you don't realize. He mentions multiple objections throughout the book. And while I strongly believe that this is a very simplistic approach, even if you are not running your business full time, I think that this is a valuable system of twice a month, you're allocating a percent of your income into different accounts to be prepared for the year ahead. If you are not running a business full-time and you're not an employee, then maybe you can set up something where your profit and owner's compensation is a different percentage. But I still think that you should pull that as a reward first and know that this is what you get for running your business. If you have a lot of debt for the business that you are running, which I would think luckily for a lot of creatives, obviously equipment can be expensive, but we are blessed to be able to do a lot of things thanks to good internet and our computers. And there may not be a lot of debt for small creative businesses, but there's also a way to utilize this to use the profit to help pay off your debt. And so he talks about how some people argue and say like, well, if you have debt, you shouldn't be paying yourself profit, which he refutes by saying, if you have debt, you need to make more profit to pay that debt off faster. And so instead of doing quarterly distributions of that profit, you're going to be paying down that debt. And so the higher percent profit your business has, the faster you'll be able to pay off your debt. So I think this system still works for anyone that's in debt. If you are just starting out and you're not even profitable yet, you're barely bringing money in, again, I still think this is a valuable system to put in place. The biggest thing that I've tried to implement with my business, even if I'm not there, is to have systems. That way they just become muscle memory the bigger that you get. And so, you know, you might be making $1,000 a month on your side hustle, but if that's $20 in your profit account, you know, over a year, you can get somewhere, especially when you continue to increase the income that you're making. I think that this can be, again, a very helpful tool to organize your finances, have a simplistic view of opening your bank account and seeing all of those different accounts of where money and cash flow is at. And of course, allowing this system to pay you for the business that you're building. It is not an easy thing. There's risk and there's hardship and there's so many things about running a business. And so there needs to be a reason why we do it. And of course, you should have a why as to why you run your business. I'm assuming the financial piece is also a pretty big incentive. And so hopefully this has been helpful. I have 5 different steps that I will leave you with to start implementing this system. And if you have questions, of course, I would love to answer anything or share my perspective, but I really just wanted to share this as a good resource and the start of a conversation for you and your business. So first step that I think is necessary would be to set up those 5 primary accounts. That way you can funnel all of your income into an income account and then twice a month distribute the income into those 4 remaining accounts. The next thing that you need to do after you set up those accounts is, again, decide the percentage of income that goes to each one of those accounts. And if you need a guide, I think you could Google this or find the book, but he recommended that owner's compensation is 50%, expenses is 30%, taxes is 15%, and profit is 5% for where a healthy business should be at. And so that is maybe a goal if you are making under $250,000 with your small business to work towards. If you are not there and you want to get to that allocation, the next step would be to see what expenses can be cut. Once expenses are cut, then you can look at adding more income. But if you don't cut those expenses and create better systems on the back end, then more income doesn't always lead to more profit. The 4th step, once you have everything set up, is to start implementing this right away. Whatever date is sooner, the 10th or the 25th of the month, I would just start distributing that income to those 4 accounts. And if you have more questions and want to learn more about this, the last step I would leave you with is to read the book to get a full understanding of everything that he has. But hopefully this has been, again, just a good conversation starter of what a good system can be to organize your finances. I really want to have conversations around money, and I know that specific numbers make it really hard. Everyone's in different scenarios, experience, demand, all sorts of things. But I do think that systems like this can be helpful for lots of businesses. So thanks so much for tuning in today, guys.